contrarian, leave it to contrarian badass Reggie Middleton. He called the housing crash. He called the collapse of Bear Stearns and Lehman Brothers and the crisis in the Eurozone banking system. Reggie Middleton.
Let's talk about Deutsche Bank once again, Veritasium digital tokens, and commoditized value. So, Veritasium has digital tokens that we issue, and the tokens are redeemable for our knowledge, our abilities. As of right now, they could be redeemed for our research. Our research is of significant value. Of course, I'm saying that, and I'm the head of the research team, but remember, we're the guys that called the collapse of Bear Stearns in January of 2008. Come March, you know what happened. We called the collapse of Lehman Brothers in March of 2008. And come, I think it was July, I can't remember when, September, look what happened. Washington Mutual, Countrywide, General Growth Properties, AMBAC, MBIA, it goes down the line. Very, very strong track record. The entire European debt debacle. So, on that note, we've been warning about Deutsche Bank. We've warned about the Italian banking crisis. Significant calls. What's special about today? Well, Deutsche Bank reported they actually eked out a profit. That profit is interesting. What makes that profit interesting is it was an accounting move. They eked out the profit because they were a little stingy in provisioning for legal expenses. Now, before I go forward, I want to focus on the actual value of being able to look at numbers and balance sheets, being able to tell whether someone is lying or not, simply by listening to them and looking at their body emotions. Again, I must be a natural at this because I'm able to do things that appears much of the sell side of Wall Street and London cannot do. It makes me a hunter. The ability to listen is analogous to a weapon. So I'm sure a lot of you are probably looking to my right and wondering, what's this in the background? So in a previous Deutsche Bank video, I went through Holland and the Dutch tulip craze, and I like going through little bits of geographic and economic history, to give a perspective on what's going on here and now, because very, very few things really happen for the first time. And when these big busts and bubbles come, there's always a plethora of people saying, but it's different this time. It is almost never different. So to the right here, we go from Europe over to the continent of Africa. This is a guinea hunting jacket. Okay, here we have an authentic, antique spear. We have the shield, and we have the actual jacket here. What makes this jacket interesting, and why I want to bring it up now, is the jacket has talismans, basically bits and pieces of the conquest of the hunter. This hunter has killed wild boar. Wild boar, African wild boar, very dangerous, lethal, they can kill you. For each animal that he kills, and he eats what he kills, he doesn't kill for sport, he kills for survival. For any animal that he kills, he takes a portion of the animal, he sews it to the jacket, and then his soul, his spirit, is imbued with the power of that animal. So the more animals that he kills and eats, and the more powerful he becomes. Take this into consideration. Every single call that I make from a financial or a technological or manufactural industrial entity that says there's nothing wrong, and I find something wrong, I learn. I become better, I become stronger, I become more astute, I become more observant. Bear Stearns didn't have any liquidity issues until one weekend liquidity collapsed and they went under. Lehman Brothers denied they had anything. General Growth Properties denied. The entire continent of Europe, the EU, denied. At some point, you have to catch a trend. I caught all these, and every little nugget of information I got, every company that I successfully shorted or bought puts on and they blew up and profited from, I was able to take one talisman, one bit, put it in my head, put it in my knowledge base, store it in my mental database, and I'm stronger. Deutsche Bank is not being forthcoming. Now, enough of Holland, Dutch tulips, enough of West Africa, Guinea Mali hunting jackets, bringing us back to the here and now, but going back to Europe. Not Holland, but Germany. Deutsche Bank reached out a profit from trading. Trading is very volatile. We had some volatility in bond trading. Many banks did very well. If I'm not mistaken, Barclays is up 40%. The American banks seem to be doing very well. Not all of them have reported. Deutsche Bank actually didn't do as well, but they did better. You take out the volatile trading, which is up and down, cannot truly be relied upon, and every other business segment fell. The company is still doing worse. Revenues are still going down everywhere except for volatile trading, which is very difficult to replicate and injects a lot of risk due to volatility. In addition to that, they did not do a very prudent job, in my opinion, of provisioning for legal expenses. Their legal provisioning went up from, I think, 5.5 to they added, a few hundred million euros to the provision. But they still have this outstanding $14 billion fine that the Department of Justice, the U.S. Department of Justice, is asking for them. Okay, they may or may not pay $14 billion. There's no precedent for paying the full asking amount. You cut that in half, there's still $7 billion. Even with the additional provisioning, they haven't even covered just that one fine. Okay, if you take a look at the average of the other fines paid by American and European banks, it comes up to $8.1 billion. Still way off. They say that they're looking to pay $3 billion. Okay, let's give them the full benefit of the doubt. $3 billion with the provisioning under $6 billion or under 6.5 or $7 billion leaves them quite short because they have a large laundry list of litigation behind them with the FDIC, many private entities, etc. Okay. Also, they have an extreme increase in economic capital consumption. At the same time, they're having a decrease in economic capital supply using their own internal numbers. On top of all of that, we have more. You see, we warned about the risks of Deutsche Bank's accounting and bookkeeping, both internal and external, as reported by KPMG, their auditors. KPMG, watch out. We've seen auditors go down by trying to back funny numbers of their clients before. Think of Arthur Anderson. Okay, but whether here and there, this is not about KPMG. Deutsche Bank, we've warned about Deutsche Bank's level 3 derivatives and valuation of said derivatives. Okay, we've warned about losses taken on these derivatives. For the fiscal year 2015, Deutsche Bank has had 3 outliers where value at risk was exceeded by actual buy and hold losses. 66% of those, 2/3 of those, happened in the very last quarter of 2015. What does that tell you? That tells you that their modeling is not accurate. The market is here, their modeling is here. Or let's put that the other way around. Their modeling is pricing their portfolio here, the market is there. Okay, so they took outlier losses 3 times 2015, 2 times just in the last quarter. In addition, their liquidity is diminishing. Okay, so you can see in that overlay. And the department, I'm not sure which particular regulatory agency, but as reported by Bloomberg, Deutsche Bank is pretty much busted doing exactly what we said they were doing in our subscriber report. Our subscribers know we put a lot of information on Deutsche Bank, right? Things that did not look right, nonsensical reporting, overly optimistic reporting, and things that just seem to be plain out wrong. Okay, so they have inflation swaps, basically credit derivatives as inflation swaps that are modeled. They're level 3, okay, or level 2, most likely level 3. Their model priced here. Actual trading market values here. Mark to market has been relaxed, eliminated. And the problem with that is you really don't know what the value of these things are. Deutsche Bank has a very, very large portfolio of level 2 and level 3 assets. These assets are primarily model driven in terms of valuation. Okay, their assumptions are totally unrealistic. Totally. Now, it's quite possible that they're going to get slapped on the wrist or punched in the head by another regulatory agency in the U.S. for misreporting and misrepresenting the value of these assets. Number one, that means that legal reserve is going to go up next quarter or two, which is going to take the borrowed money that they use to have this profit. It's going to get paid back with interest, and you're going to have a bigger loss. Number two, okay, you don't know what these potential fines may be. They may be significant. Most importantly, or not even most importantly, number three, but not most importantly, you have the actual losses. Okay, now the actual loss is going to be borne, which means you could possibly going to need more capital, probably going to need more capital. Now, number four, and the most important, sooner or later, and most likely by then, trust in Deutsche Bank should be eliminated. Because now, you can't trust them. You can't trust their assumptions. You can't trust their modeling. You can't trust what they're carrying their assets on the books as, which is why they're trading at 0.25 times book value. Nobody believes the book value. Okay, the 0.25 times could possibly be optimistic. In previous videos, we've warned about the run on Deutsche Bank. It will come from internally, basically their investors, their clients, and their depositors. Deutsche Bank's CEO in the conference call has admitted that they had $9 billion of asset management wealth leave Deutsche Bank. We warned about the run on Deutsche Bank from counterparties. He's admitted that the brokerage and the broking and transaction side of the business lost clients. We've warned about counterparty risk, contagion, and exposure with Deutsche Bank. Well, now the Bank of England has been watching videos, quite possibly has subscribed to our research, and they are instructing all of their large lenders to ascertain the risk and exposure that is had towards Deutsche Bank. These are the big UK lenders. One of these big UK lenders are targeted by us in our research. The subscribers know who it is. Significant exposure to Deutsche Bank and exposure to the Italian lenders. Go through our EU Contagion report and series, which is an educational module, very, very extensive, of which we went through two Italian lenders, Banco Popular and Banco Popular Milano. Okay, of course, there's some who are in worse shape than those. And we went through quite a few lenders. And you know which UK lender we have in mind. This is a potential domino effect. The Bank of England is basically following the logic that we've laid out. And you see the potential for significant contagion and domino effect. This is not being reflected in share prices right now. Right now. We warned again about the run in the bank coming from depositors. If depositors use basic arithmetic, 3rd to 5th grade math, they'd calculate that there is no way in the world the risk of putting your money in Deutsche Bank is compensated by the measly return. John Cryan, who's the CEO of Deutsche, during a conference call, has said that the bank has $200 billion in liquidity reserves. It sounds like a lot. But I did warn, right? I warned that there would be a run on the bank. Well, in June, the quarter ending June, there were 223 billion euros of liquidity. As of September 30th, okay, 27 days ago, there was $215 billion of liquidity. 27 days later, 200 billion. They lost $15 billion in 27 days. That is more than 2 billion. That do the math. It's a lot, okay? That's more than $1 billion every other day that's been leaving Deutsche Bank in terms of liquidity. Most likely from the depositor base. So, have I been good? Have I done a good job in terms of pointing out the weaknesses, I don't want to call them misrepresentations, but the inaccuracies in economic reporting for Deutsche Bank? I believe I have. If you look at the stuff that we put out in our subscription agreement, I've had pinpoint accuracy, West African hunter style accuracy, and Bear Stearns, Lehman Brothers, General Growth Properties. I guess we use a bigger one, European debt debacle. The writing is on the wall for Deutsche Bank. And no, it's not different this time. Peace, au revoir.